Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, personal finance, and most recently, Bitcoin mining related. Now for today's video, we're going to be following up on a subscriber request and featuring Soluna Holdings. This is one of the smaller Bitcoin mining companies that we cover on the channel, but they've got a really unique and diversified business model that I'm excited to explore in today's video. Now we've welcomed on the CEO to give us an update on a number of their key initiatives, answer some of the viewer questions, and tell us about their preparations going into this year's halving event, which is now under 100 days away. So we've got a lot to talk about, but before we do, take a second, hit the like button, you guys. It's 100% free to do, and it's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comments section below if you're currently holding shares of Soluna, how you think they stack up to some of the other miners, and your price target moving into halving this April. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got a really exciting one for you. John Belizaire, who's the CEO of Soluna Holdings. Now this is one we've talked about previously on the channel, specifically how they're harnessing renewable energy. In the last video, we talked about the wind farm. John, we're super excited to have you here today. We really appreciate your time and looking forward to the discussion.
Absolutely. Thanks for having me on.
Yeah, you're most welcome. So I know this is your first time on the channel. So to kick things off, can we get a quick high-level summary of yourself and how you got involved with Soluna?
So I am CEO of Soluna Holdings. My background is, best way to think about me is I have 25 years of entrepreneurial experience, primarily in the software space, and for that 2+ decades, I've always sort of been in the middle of a confluence of a big technology wave and some legacy industry. Started out when e-commerce was slamming into brick and mortar companies in the late 90s. And most recently, before Soluna, I was bringing digital technology and workflow solutions to the insurance space. Soluna is another confluence. If you think about it, it's the confluence between next generation distributed computing, powering Bitcoin, digital assets, and the energy and data center realms, two sort of industries that are being changed slowly but surely by this advanced technology. I came to Soluna because one of my longtime investors and board members was looking for a CEO to helm a new company that was focusing on monetizing stranded energy. We had big wind projects in Northern Africa, and those projects were having a challenge getting their power to the grid because it didn't exist. And so we spent a great deal of time studying this whole issue of what do you do with wasted renewable energy. And so that's why Soluna's mission is really focused around driving more renewable energy on the grid by solving this big problem that the industry has, and that's wasted energy.
Yeah, and one of the things, I know you brought up stranded wind power there. One of the things we talked about in the prior video is we're seeing a lot of the larger pure play Bitcoin miners set up these absolutely massive facilities, which do serve a purpose, but in a lot of situations, there's small to medium sized renewable energy, wind farms, things like that. And there is a lot of power that's really left or remaining there that can be harnessed for additional things. And to me, in my mind, that was a clear differentiator in kind of your strategy and business model. So now that we know a little bit more about you, can you talk to us a little bit about Soluna itself, the operations, some of the projects that you guys have in flight right now, John?
Yeah, you know, for the listeners or the audience, you know, the way to think about Soluna is we are a infrastructure company. Most of our peers are pure play miners. Some build their facilities. Most are asset light. We're really focused on data centers that can be co-located with these wind and solar and hydro facilities that have wasted energy. And our goal is to use the data center to monetize or eliminate that wasted energy. So we're a problem solutions company going after the market. And once we build that data center, the question is, how do you monetize that facility now? How do you return the invested capital on that infrastructure that lasts 30 plus years? And our strategy is to do three things. Well, really four things, actually. The first is where we started, essentially some prop mining. We were primarily prop mining in 21, going into 22, late 22 with the winter months that ended up happening in the space and challenges we had as a company. We started shifting our focus to really leverage the fact that we were an infrastructure company and move more to hosting. Today, out of the 75 megawatts we have between two primary facilities, Dorothy and Sophie, 2/3 of that is hosting and about 1/3 of that is joint venture mining. So that's two of the four things. We do prop mining primarily in a joint venture fashion going forward. And we do hosting, where we provide our super low cost facilities and access to green electrons to some of the industry's largest and more sustainability focused Bitcoin miners. The third thing we do is, because our facilities are all designed to be flexible. If you've seen some of the pictures of Soluna facilities, they're in this very unique configuration that is unique to us. In fact, we've just been awarded a patent for that design, which allows us to manage the thermals and so forth. And we integrate those facilities into a advanced software system we call Maestro OS. So we read all of the signals, how much power the wind farm is producing, what's the grid price is, what's BTC price, and we basically try to determine at any given period, which is approximately every 5 minutes, how big should this facility be right now? And Maestro then shrinks or reduces that size, or even completely curtails it depending on what's happening, to enable that. And what that allows us to do, that behavior, well, the grid finds that behavior very valuable for when they're having emergency situations or they need more power for the grid. That flexibility that we have in the facility, we can actually offer to the grid as a service, and they pay us for that. That's ancillary services. So in the four quadrants, we now have 3 of the 4 generating revenue today for us today. We just kicked off ancillary services in Q4, and we're implementing that throughout this next quarter and through the remaining periods throughout the year. And then the fourth area is a new venture we'll be forming. You'll hear more of those announcements this year, and that is expanding into the AI business. Because our facilities are integrated with renewables, we see an opportunity to bring more sustainable, scalable computing power to the AI industry. AI has 3 main problems, Bryce. It's incredibly hungry. So Bitcoin gets a lot of flack for being power hungry. Well, guess what? Generative AI is also very power hungry, and the amount of energy that will be needed. You have all sorts of data points that are being collected now and analyzed, but just anecdotally, you're talking about 5 gigawatts of demand just this year for new AI footprint. And the second issue that it has, it's thirsty. Because of the fact that it's generally deployed at hyperscalers, you have this evaporative cooling design at data centers. It sucks up a lot of water out of the ground to support that high density and that type of compute fabric. And then the third issue that it has is that it's dirty. The more you put this amount of energy where data centers are typically located, you're gonna fire up more gas plants, more coal plants, because these facilities tend to be on 24/7. Well, Soluna's different. Because our facilities are flexible and we place these facilities next to renewables, you now open up a whole new type of data center that you can build specifically tuned for AI applications. And that's our new Helix design. And that's what we're working on this year, and you're going to hear more about that in the coming quarters. So that's Soluna in a nutshell. We're an infrastructure company focused on delivering advanced computing to help solve a big wasted energy problem, and we make money in 4 different ways.
Amazing. Yeah, listening to you talk through that, John, it's so interesting as these Bitcoin mining and HPC and AI companies evolve and get more complicated, more complex. There's so many different avenues and arms of the business itself. I was chuckling to myself as you say AI is super hungry and thirsty, because when Bitcoin came out, there was so much contention about the power usage, and now everyone's chat GPT in their essays and doing the AI headshots and stuff for their LinkedIn profiles, and you don't hear anything about it, right? So it's kind of ironic.
That's right. People don't realize how much that's using, how environmentally bad it is for those types of compute. Just for the audience, Chat GPT-3, Microsoft, training GPT-3 used about 2.8 million glasses of water. Think about that for a second. It would take you about 100 years to, drink your daily required, amount to sort of hit that number, So it's pretty significant.
It totally is significant. And I know you were mentioning some of those images of the facility, and we'll make sure we get those up on the screen too. Now, the next question, John, this came to us in the form of a subscriber request. And we wanted to get an update on your debt position if possible, seeing as we're seeing a lot of the miners really strengthening their balance sheet, moving into halving, and in anticipation for that. The nice thing with you guys is you've got some alternative non-halving correlated revenue streams, which you just talked about. But do you have anything you can share in terms of the debt position?
Yeah, so the main debt that we have on our balance sheet is this convertible note at the parent company level. When we first wrote the note, it was approximately a $15 million note, and we've been whittling down that note over the past year or so. It increased last year when we worked with the debt holders to provide this company some more capital to assist it through some of those challenges we had. And then the last 2 quarters, we've been focusing on essentially negotiating with them through a structure to reduce that debt load. We repriced part of the note, we converted a portion of it, and we also added a new feature that allows us to pay down that debt. And in the coming quarters, you'll see why we did that, because we want to be able to sort of essentially bullet take it out at some point. And so that 15 million is now much lower. It's sort of approaching the $8 million level. We just announced in our business update that we significantly reduced it by about $4 million. So our debt load is dropping pretty considerably. In the coming quarters, we'll start to see that drop a lot more. The other thing we're doing to bolster our balance sheet is bringing in more capital parties at the project level. And we're also looking at some other parties that could also introduce ways for us to raise capital at the parent company level to support both balance sheet bolstering as well as investing in more of our projects. And you'll hear about those announcements coming up soon as well. So there's a lot we're doing, much like our peers. We're all sort of, if you use the squirrel analogy, finding the appropriate sustenance to help us through the halving. And it's unfortunate that we're in a business like that where, Bitcoin goes through these periods where it affects the economics of the businesses, and there's not much you can do about that, but to sort of hunker down. And the solution to that is to just have a diversified business. That's why you're seeing us and our peers find other revenue streams to be able to balance the fact that we're in this mining business that has a lot of elements where it's really out of your control as a management team. So one of the key ways we've always envisioned making money as a company is by using this flexible nature of our data center to generate revenue by providing a service to the grid. On a national basis, the grid has a big challenge, right? There's always a mismatch at any given time between power and demand, and that has a lot to do with the changing mix of the generation capability, the power that's being put on the grid. More of it is intermittent, controlled by Mother Nature. And then the other challenge is that the weather changes are happening such that you may have more generation or less generation depending on where you are from a weather perspective. So the grid needs demand response, and telling people to turn off their dishwashers isn't scalable enough or sufficient enough to meet those demands. And so you really need large grid scale demand response solutions. And that's one way that Soluna brings value to the grid. Our data centers can provide that flexibility. And so there's a host of different ancillary programs that we plan to participate in. The initial program, which is demand response in Texas, we're getting involved in, is our first foray into that, and that's looking very promising for us. And initially it'll be a meaningful but not a major part of our revenue. But over time, as we build out more facilities and we sign up for more of these larger and more interesting programs, all of which we have the capability to support, you'll see that represent a much larger portion of our revenue as a company. And so for us, it's a key part of our business plan and a key part of the way we strategically diversify our revenue at the company.
Gotcha. Yeah, I appreciate you going into a little bit more detail there, and that's definitely one to watch as things evolve. Like you say, it's really just the tip of the iceberg there, but I think there's a lot to that. And it's funny you actually brought up the dishwasher thing, John, because I live in Alberta, Canada here, and we got a notification when it was super cold to, stop using any optional power and stop running.
Right.
Which is crazy. I don't remember getting one of those, but it really makes you think quickly, hey, if the power that I plug in or turn on the wall wasn't there, what would I do? Right?
Exactly.
Yeah.
Exactly. Yeah.
Now,
we live in an environment here in the U.S. where, and in Canada where you sort of take power for granted, but it's always there. In lots of other places around the world. When we were in Africa, that's not an assumed thing, right? It's actually, sometimes you get brownouts. The power is not completely reliable. And so we're starting to experience some of that here. And so you need a whole host of new capabilities and technologies to ensure that confidence in the power system continues.
Yeah, and who would have thought grid stability? It's the Bitcoin miners here to save the day.
Exactly.
Now the next question for you, I thought this was a really good question. This one again was from a subscriber. Saying, hey, with the increase in transaction fees and the upcoming halving, is that giving you guys more leverage or negotiation power in a lot of these joint venture discussions that you're having and some of the ways that you've set up this organization?
That's a great question. We're seeing two interesting developments in our business. One is when we first started, most of our new power partner relationships were formed by us going out and finding them. We were sort of calling and reaching out. That's completely flipped. Most of our new projects and growth in our pipeline come from inbound calls from some of the largest asset owners in the industry. And they the calls are they always go something like this. Hi, Soluna, we know who you are. You don't have to do any hello pitches. We have just like very specific questions for you, and we have like these 5 assets that we want you to look at, or a number of assets. And typically what we're saying is, yeah, we know who you are too, and we want to see these 5 specific assets because we have like this massive database of every single asset owner and which ones we know are going to be in trouble, and so we can say, give us the data for that. The second thing we're seeing is there are a lot more project level folks coming our way to partner with us, both from a financing perspective, a hosting partner perspective. There are a lot of big miners that have machines that are in storage. They unplugged them last year, and now there's all sorts of interest in plugging them back in. Not a lot of sites, not a lot of plugs available, and we're one of the players that constantly are opening up new plugs. And that's really being driven by the improved revenue opportunities and profit opportunities on the network. And so that's bringing a lot of people our way too.
How nice it is to be getting inbound sales calls, rather than doing outbound. Yeah. No, that's right. And really what a testament to the business model that you've put together. And again, one of the unique players that caters to these smaller locations or mid-sized sites that maybe have been looked over, and that's obviously why there's so much interest now. Now, John, the last couple questions for you. Number one, how confident are you in the management team? I think you guided towards 29 million of EBITDA for 2024. Are you still feeling confident with that? Are we going to see any revisions throughout the year based on kind of some of the stuff we've talked about in today's visit?
Good. So we built that earnings power when I first became CEO. I think it was like the middle of last year, and it projected out returns and profits for all of our sites. We'll be putting out another one after our K comes out. So we just closed our Q4, so we're putting together our annual report, and that's typically when I announce what our plans are for 24, and also we put out our sort of earnings projections under different scenarios. This one will have different scenarios because of the halving. We don't know what hash price is going to do. Even in our budgeting process, it was interesting. So we had to sort of show different cases to see where the business can go. But in each case, we feel pretty good about the revenue generating potential of the sites. And when you add D2, which we're going to be working on Dorothy 2, we feel really good about sort of that projection even being richer. So I think that I'd say to the group, stay tuned. We'll put up a new earnings power that gives you some perspective on that. But we're feeling pretty good about the business's opportunities in 2024, our growth prospects, and our sites are doing much better than we had planned in terms of their operating efficiency. We also improved some of the profitability, the deals that we put in Sophie, and improved some of the profitability there. I don't know if folks know the different sites, but Sophie is our Kentucky site, and Dorothy is our first Texas site. That's a 50 megawatt facility, and Sophie is a 25 megawatt facility.
Sure. Yeah, it should be an exciting year, and you alluded to this earlier, but yeah, one of probably the only industry I can think of where you have an event like the halving every 4 years that you've got to adjust for and project for and all the rest. Closing question, last one, and then I'll kick it back to you. Self-mining expansion plans. I know you just mentioned your two big sites there, the 25 and 50 megawatt. Again, we always ask questions. Maybe we can't get all the answers, but is there any other nuggets or breadcrumbs you can give us here to keep us going till the next interview?
Yeah. So things to look out for, progress on Project Helix, which is the AI initiative, updates on where we are with Dorothy 2 and the roadmap for that this year. Dorothy 2 will be primarily hosting, so a very scaled site, over 45 to 50 megawatts in terms of its footprint. And that's the second phase of Dorothy. Dorothy is a 100 megawatt facility. So Dorothy 1 is 50 megawatts, and Dorothy 2 will be a second 50 megawatts. But we're reserving 2 megawatts of that site for the new AI facility that we're going to be building there. And so you should be sort of, on the lookout for that. Some new financing updates, you should be looking for that. So there's a lot of interesting things that we have planned in 24 that will keep both our shareholders quite happy with the progress we've made, and also give a better picture of the future of the company.
Hey, we're looking forward to it. As mentioned, John, we'll be sure to have you back on throughout the year to get these updates as they're available. We appreciate the time today. Love what you're doing with the company, and we'll see you in a couple months here.
Thanks, Bryce. Appreciate it.
Take care.